everyone. Welcome. Let me make sure my audio is working fine. I think we're good. Hey, I see you guys' reaction. Hey, what's up, guys? Hello. Oh, thank you for the likes. Make sure you guys hit that like button down below. If you guys don't want to do it yet, that's completely fine too. Alright, thank you for the reactions, guys. Thank you. Hey, what's up, man? Hello. Nice to see you back in here. Thank you for chatting in the live chat room. Okay, I think the audio is balanced here. I think. Yep, we're good. All right, guys. So let's get right into it. All right, I've been going right into it these days with the streams, but yeah, if you guys take a look at the title of the stream here, right? Well, are we in a stock market bubble? Okay, and here's the thing. I don't think so. Okay, now here's the thing, and there's a bit of a nuance there to my answer. Right, so first of all, one thing that I want to point out is that yes, we are officially in a technical market correction. Let me actually get out the Heikin candlesticks here. Go back to the regular candlestick. So if you trace from the current all-time high, which is around here, okay, all the way back down to the closing price of today, we're around negative 6.65-ish% on SPY futures, right? So again, this is SPY futures, by the way. Now, if I decide to go to SPY itself, okay, let's take out the RSI there. Again, these are all the weekly time frame perspectives, okay, all the time frames here. We'll be looking on the weekly perspective because, well, we need to be focusing on the longer term time frame. Hey, what's up, guys? Hey, thank you. Welcome, guys. Welcome to Thursday stream. Welcome. We just began, so you guys didn't miss out on anything. But for SPY here, it should be around the same, right? So around 6.60% there. We just still say negative 6.60% from all-time high. So we are officially in a textbook correction, right? Again, let me just reiterate this again. The textbook correction range from a percentage point, percentage basis is from negative 5% to 10%. And people have always asked me, what happens after the negative 10%? Well, once we reach negative 10, and if you go past negative 10% as you pull in into a corrective phase, well, that will most likely lead into negative 15% and eventually a waterfall move to negative 20%. And from a textbook perspective, that is what we like to consider a market crash. And usually a market crash is fully anticipating that an economic recession or even a depression is on its way. Does that make sense, guys? Okay, so again, I just wanted to repeat that and reiterate that so that you guys all understand why I always talk about the negative 5 to negative 10% range. Because again, we've been looking for this corrective phase to occur in the markets. But now, let's segue into the actual answering of my question, are we in a stock market bubble? So, like I said earlier, I don't think so, but there is a nuance to that. So first of all, the reason why I don't think we are in a bubble is that, well, before we had this corrective move down, we didn't have a bunch of other external catalysts and conflicts going into the markets, and the markets preparing in anticipation for the potential future consequences or implications of such catalysts and conflicts. And if you did not have that, okay, I would have expected more of a easier move lower rather than a very rapid move down or a correction to the downside. So with all that in mind, the bull market that we had for the past around 2.5 years, two and a half years is what I would say. I know some people might disagree, but from the price trend wise and price action wise from the S&P 500, we have been in the bull market for at least minimum 2 years, and this comes after, if you guys remember, the 2022 bear market, right? And so during this entire time, right, we were in a complete reset this entire fiscal year from January to December of 2022, we've actually were able to reset the complete over exuberance of equity, right? Of equity prices across multiple sectors. And again, if you guys remember from 2022, the only sector that did extremely well and was basically considered undervalued at the beginning of 2022 was the energy sector. And so every other sector had their day of reckoning, or I guess I should say a year of reckoning. And this was also a time when we saw zombie companies, these junk companies, going back down and absolutely hitting lows or even being delisted. Right? We also saw a lot of SPAC companies that IPO through SPAC mergers, and they also became penny stock companies or became delisted from the stock exchange. So that was kind of a meme reversion, quote unquote, back to the average ways that the market should be at, right? So it also reset the sentiment as well. So in 2022 we already had all of this. This already happened. Okay, and we came out of this a lot stronger from an economic standpoint and from a stock market perspective as well. And so that's the reason why, from my own personal opinion here, my own subjective opinion, not an objective opinion, that we weren't really in any type of over exuberance or even mania in the overall move up higher for the last 2 to 2.5 years. So where do we go from here then, right? So if we are not in a stock market bubble, where do we go from here? Well, first of all, a lot of people will try to say that, hey, this is the results of the AI stock market bubble popping. Okay, but here's the thing. Based on all the companies, all the companies that have been involved with AI and being involved with the infrastructure of AI, okay, that's the most important part. That's kind of the foundation of this entire new paradigm shift across, well, world economies is what I was saying. AI is still very much a baby industry, right? And we also know this, right? NVIDIA has been a huge voice in the overall AI sector, and even during one of their previous conferences, they even provided this very nice exponentially rising, this kind of a nice curvature graph of what to focus on each single phase of the AI revolution, right? For the new booming AI or potentially booming AI industry. So right now, obviously, people are now focusing on AI agents. If you guys don't know what that is, please look it up. I'm not going to try to explain what that is here, but again, look it up. And AI agents is becoming a little bit more put into focus here, rather than looking at the infrastructure that supports AI, even though that's still a very big a theme here. But again, to me, this is not a stock market bubble popping, or even in a specific group like AI. I don't think AI is popping already, because again, from a macro perspective, AI still has a lot of work to do to continue to grow as an industry as a whole. So this pullback again is just filled with catalysts that the Fed is not able to control, the Federal Reserve, and the markets have not been able to anticipate. Okay, even though we did at Charts Focus One, we're able to anticipate what was going to happen with this new administration that was going to come in since last November when the elections happened. But it seems like Wall Street and the overall majority of market makers were not able to, kind of think about such consequences and implications of having this new administration come in, even though we had plethora of evidence and data of what they would be doing, well, since the very first term back in 2017, right? So, this is one of those things where, it's good to learn history, learn economics, and just go back to, seeing the past, right? So that we don't repeat the mistakes of the past, right? I'm sure you guys have heard that before about learning the importance of learning history, even when it just comes to the overall stock market and just from an economic perspective as well. So with that in mind, with this move down, there is now here it is, right? So with this move down, the reason why I've posed this question for you all is that I'm still seeing a lot of people on Twitter, on StockTwits, on all these different social media platforms talking about the fact that the markets have popped, right? This is the official big pivot to the downside where we're going to see a huge market crash. Some people are now calling for a revisit of the COVID lows, right? So this is before we had the complete AI theme going on, just an overall, liquidity injection from the Fed and etc. Right? So this is the perma bears, the ultra bears who are wanting the markets to crash all the way back down to March 2020 lows. And if you guys want to take a look at the percentage decrease from the current all-time highs, well, let me show you guys that. All right, so this is absolutely outrageous, but this is not going to happen. All right, so this is a negative 64 or nearly negative 65% move to the downside from the current all-time highs. Now, again, maybe this might happen if the entire world goes berserk, when the world ends, but I don't see this happening anytime soon. I don't see why the current president or the current administration in this nation will try to do this. This wouldn't make any sense either, and I don't think they can. But can still expect to see either a very, very good correction of at least negative 10% or even negative 15% from the current all-time highs, since that will still be a correction, but that'll be dangerously close to what I said earlier, to that negative 20% pullback, which will indicate that yes, we are officially in a market crash, and will indicate that the overall economy is heading towards a deep recession or a huge depression. Okay, so now what was I saying here? So before that little tangent there, my own personal perspective on this is that as long as we can continue to pivot, at least make attempts to move back up higher, we shouldn't be in the stock market bubble pop, right? I mean, people are still saying that we are in a stock market bubble even after this I would say officially 2 weeks of a pullback so far. And it just doesn't make sense to me that we would be in a bubble after such good corrections in the entire bull market run up for the past 2 to 2.5 years, along with the fact that we already had this quote-unquote reset from the fiscal year of 2022's performance, right? On the backdrop of this performance of this bear market to the downside for one whole fiscal year. So I just want you guys to know that based on what I've told you guys about the bond market and in relation to the equity markets or even the crypto markets for any of the CFO Stream and Watch readers out there, we are not in an official stock market bubble that is popping, right? Again, keyword popping. It is not popping, or we're not in a bubble yet. All right, and sentiment has been absolutely put to the ground, even though you guys may not believe this, even though breadth was not overtly extreme, even though we just needed a textbook pullback to quote unquote reset the market breadth in the short to mid-term perspective, or sentiment was not even showing over exuberance or any type of mania, right, before we saw this pullback occurring. That's the reason why I think that first of all, we're not in a bubble, and also we're not seeing a bubble being popped, unlike a lot of the people on social media are saying. So, based on my subjective opinion on that, okay, obviously a lot of people will disagree with me because of this pullback. We are all at very official, significant pivot points on across indices and even futures markets. Right? For example, the S&P 500 futures on the daily time frame is currently sitting around and just kind of very rapidly, violently, I should say, moving up and down for the past 3 trading days. And so far, right now, we have a solid gap up, a very tiny one at that, but this gap up was only partially due to the fact that we had a little bit of a positive news from the tariff side, even though the president continues to go back and forth with the tariffs. I don't know what kind of game he's playing, but again, from the previous stream from Tuesday night, I told you guys that this man, our own president, has been attacking his own trade deal, calling it the worst, trade deal, is a very stupid trade deal, even though he's the one that said, well, not just said, he's the one that brought Mexico and Canada together to sign this quote-unquote new trade deal that would be potentially better than NAFTA. But it just makes me laugh all the damn time. I don't know what he's doing, because he's trying to dismantle his own trade agreement that he made Mexico and Canada sign. Again, Mexico and Canada didn't have much to argue with, because again, these three countries from the north to south rely on each other, right? This is what free trade agreements are about. This is how free trade agreements work in a more freer world, or in this entire modern economy, right? Or modern economies around the world, right? So, I'm just waiting to see when Trump will realize that he is really just trying to dismantle his own trade agreement that he made that was supposed to replace NAFTA, and him calling it a bad trade deal and saying that it hasn't been working out. It just doesn't make sense, right? Also, we don't have too much data just yet to see whether or not that new trade agreement from his first presidency was doing any positive or negative, even though there are early signs that it was most likely sort of doing the same thing as NAFTA. He just kind of reworded it to be his own trade agreement that he made, and so again, him blasting his own trade agreement is kind of weird. It's really weird, and him trying to dismantle it through these horrendous tariffs that doesn't work in a more increasingly freer world, right? So especially from a trade perspective, and again, as I've said, this is kind of the archaic perspective coming in that he's trying to implement in a free trade world of mercantilism, which again doesn't work anymore. That it just doesn't make sense, right? It just doesn't make sense that mercantilism will work here, especially when we have such speed of data and information being tracked and being sent across the world and around the world. Does that make sense, right? So it didn't take over a month for trade agreements to be formed, right? People are able to communicate very, very rapidly across the world to create free trade agreements. So now, right? So now, this is again. I'm going to reiterate what I said on Tuesday. This is where the markets are now being very, very fearful about, because of that happening. Because of this happening, right? That markets are based on this foundation that anyone can trade in, and this is a free market. This is where people are able to take control of their lives through the market, right? By being involved with it. But if the U.S. economy, if the U.S. Free trade markets try to be towards more of a mercantilistic type of of market or trade market, that wouldn't make sense, right? And so the overall U.S. stock market is also reacting off of that, saying that, well, if you're trying to regress from or just pull back from the current free trade agreements, what's going to happen to the economy? And this type of uncertainty is really causing a lot of fear, right? Uncertainty breeds fear. And that's what we're seeing now. And as long as the Trump administration continues to push out these tariffs, and also not just push out these tariffs, but also pull back on the tariffs, it's going to cause a lot of uneasiness. And we've also seen the Federal Reserve of Atlanta, right, coming out with that new GDP number, and it's just showing significant contraction all the way up into the first half of this year, and that's not good. Right, that's not good, because it was such a rapid decrease from the previous readings, the past the two previous readings, I would believe, and I think that was the quickest decrease in the readings as well compared to what we saw in 2022, right? So something's awry here. Something's gone wrong with the overall economy. If economists and even measuring metrics like that from the Atlanta Fed are indicating that we're going to be seeing some sort of an economic contraction, even though we're still very, very uncertain about these tariffs. So there's a lot of emotions going around that's also really much driving this overall correction to the downside. And again, I don't think this will lead into a potential bubble burst or a pop, but then again, personally, from a subjective perspective, this is my own opinion, we are not in a stock market bubble, or we weren't even in a stock market bubble for the past 2 years. And I've been seeing a lot of people saying that this is the quote-unquote real move that we should have been seeing for the past 2 years. But if they have been following every single important and relevant economic metric that we have been focusing on here in Charts Focus 1, especially for the readers who are watching the stream, you guys should know that the economy was on a rapid recovery and plus some great growth that just began to really affect the overall economy in the US and even other allies of the US, okay, like so all the other Western countries and especially in Europe. We're just getting to that point where we could potentially see a good a pivot where the Federal Reserve will be in a much better position compared to last year. But that was completely usurped, right, and completely dismantled by the current violent catalysts that have been affecting the overall markets and now the overall economy. And again, I warned everyone of this post-elections as well. So, if you guys listened to me, great. If you guys didn't, I don't know what to say, right? I've been providing as objective data and analysis as possible. So everything has become truth since the 2022 bottom, or if you guys want to do 2023 bottom, whatever you guys want to choose, all the up into now, right? And I am most likely going to be continuing to be correct on what I say here. So I'm saying that as in the most humble way possible. Okay, just don't forget that. But with the overall futures action so far right now too, it seems like the futures really don't know where to go. We're still hanging around right below, we're teetering right below the daily 200 SMA, which I don't like. And if you take a look at the volatility index, the volatility index of the S&P 500, I mean, this is not good, right? Obviously, it's better than seeing a rapid pop up, but this slow climb up in volatility, this expansion of volatility in a very nice structured manner while the overall markets move down very rapidly is not good, right? Because this type of volatility will still be priced in weeks down the line, right? This expansion in volatility. And so, especially when it comes to the VIX futures, right? Okay. All right. And VIX futures is still looking pretty quote unquote bullish. And it's actually hitting, well, actually we made a higher high compared to the big push in volatility expansion in December of last year. So this is very concerning on VIX futures. I just noticed this actually now. Oh boy. Okay, and so I wouldn't be surprised in the next few months if we do hit the highs that we saw on VIX futures here that we saw back in August during that unraveling of the yen carryover trade, or at least hitting very, very close to the highs of this massive move that we saw in volatility. Okay, so that is the bearish case for me, from my side. But then again, I want to stay positive here because again, we're not in a stock market bubble. So again, I answered this question for anyone who just joined in the beginning of the stream, and I've also said that we are not seeing a stock market bubble popping because we are not in a bubble. Does that make sense, guys? Yeah, thank you for that comment, Sparky. So let's actually go over these inverse ETFs, right? So yeah, I've seen those flows as well. So SQQQ has gotten extremely powerful in the last couple of days regarding the volume. Right, this is the most amount of volume that we've ever seen so far, and there's a lot of fear-induced bidding. Right, fear-induced bidding going on with SQQQ. Okay, and right now, in the most short-term perspective that I can get for my analysis that I'm showing you guys, based on everything, the VIX, these inverse ETFs, these leveraged inverse ETFs, and where the markets are at now at their significant respective pivot points and SMA support areas, it's probably not a good time to be short, right? It's probably not a good time to be heavily short into the markets, because we're really just nearing this apex point across all of these inverse ETFs and leveraged inverse ETFs like SQQQ. So there is a good chance we might pop up higher again to end the week tomorrow, based on how we react off of the important jobs data that is coming out tomorrow morning, and possibly retest this daily 200 SMA and have a very big smackdown into the rest of the day, right? So, you know, hey, what's up, Joel? I see a lot of people in here now. Make sure you guys hit that like button down below. Thank you guys so much, first of all, for even joining. But if you guys are just joining in now, please watch the replay. I've always said this for every single one of my streams, if you guys are joining in late, but I highly recommend you guys to watch the replay. All right, so oh, we're at 7 likes. Awesome. Oh no, we're at 8 likes now. Okay, so you know, it seems, yeah, Sparky, that too. Yes, TQQQ as well. Okay, TQQQ. That's something that I was about to mention right now too. So what was I saying here? Yeah, so in regards to these inverse leveraged ETFs, it's kind of at a point where it's not a good time to be short, which now, thank you, Sparky. Okay, leads me to TQQQ. This is the leveraged long, right? This is the Ultra Pro QQQ ETF. And, you know, it seems like this one's also, just based on my technical analysis that I've done here in the past, we are reaching a pretty good, important level here, the 64 whole number support level. And so all of these, you know, inverse and just leveraged ETFs are all both showing that it's most likely going to be an intermittent bottom based on how we react tomorrow. Again, things are very iffy right now. Things are in a seesaw mode. Things are in a, well, what most people like to say now, the kangaroo market. We are in officially a kangaroo market that is to the downside, obviously, but it seems like every single trading day, every single you know, trading week, we're seeing intraday ranges being pushed to the upside off of news, and then being immediately pushed back down off of news as well. And that's what we like to call or describe it as a kangaroo market. So tomorrow, for example, right, we might gap up on the important jobs data that will come out tomorrow morning. And then somewhere an hour down the line into the market open, we might be seeing a massive rejection move back down and heavy selling off of news. And then, and then, well, maybe in a couple of hours later, maybe during power hour, the last hour of the trading day, we might see some even more news where we see a huge bounce heading into the close. Right, so that's yeah. Look at those joeys or kangaroos on in the chat. So, you know, this is kind of what we've been seeing, right? So at this point, people are really just hesitant to go into the market and be involved with the market, even though they might be seeing a good trade. I've been hands off this entire day too, and I'm glad I did, right? Even though my Roth account is not looking too good, since I just became red at the end of the day, year to date on my Roth, even though it's only a small percentage move down from year to date. But hey, you know what? This type of price action is making everyone frustrated, even me too, who has experience of 8+ years now in the market. So, you know, it's the same thing that everyone is feeling. You guys are not alone, right? So, you know, with TQQ here as well. TQQQ, Sparky, I think you said, what threw me off is also seeing big volume calls on TQQQ. Yes. And I think, let me actually go over that. Let's see. Where? I think we saw some 70 calls and 75 strike calls coming in as well. I think so. I'm pretty sure, and they're all short-term expiration dates too. So that's kind of interesting. Let's take a look at it from the hold on a bit, guys. And welcome everyone who's just joining in now. Welcome, guys. Make sure you guys hit that like button down below. Wow, it seems like a lot of people are joining in tonight. Awesome. Yeah. So it was the March OPEX. That's right. Yes, that is correct. And what was it? Where was it? Yeah, this is the one I saw. The 75 strike call contract, and also it's the 71 too. But whoa, looks like the 68 strike call contract got very active today too on the dip. You just have to see if this will be carried over to the OI. But yeah, so it seems like there's a lot of people who are now, based on the flows that I've seen so far on the call side, especially for leveraged ETFs like this one where it's to the long side. To me, it seems like people are trying to quote unquote revive the seasonal trend where we see early, not just early, I should correctly say the first half of March all the way up into the March's monthly OPEX, we tend to see prices surging back up higher, right after an initial February dip, a late February dip. But unfortunately, that did not happen, as the end of February is what caused this move down based on catalysts and other news, and we have continued to move down this entire first trading week of March, right? So it seems like based on the option flows, we are trying. Hey, thank you guys for 9 likes. Thank you. Let's try to get that to 10 likes. It seems like based on the option flows and just based on everything that I've just talked about from Tuesday all day up into tonight's live stream, we are trying to head for an interim or intermittent bottom here, as we've been, especially like on SPY and even just on SPY futures, which is nearly the same. SPY is on its kind of last leg or last line of defense, line in the sand, at this daily 200 SMA support area. So people are trying to create this, I guess, pivot. Seems like the overall option flows are indicating that as well, that we want to make sure that we're holding this daily 200 SMA and really just trying to potentially at least give us an intermittent rapid move back up higher and potentially have that seasonal trend run for the first half of March into March's monthly OPEX date of March 21st to the upside. Does that make sense, guys? Right? I've given everyone the seasonal trends, a detailed version of the seasonal trends in this week's CFO Stream and Watch report. So if you guys aren't a reader and if you want to become a reader, please DM me on Instagram, or just simply take a look at the description box down below. You guys will find the link to subscribe to become a reader. And once you do, you guys will also be a private member. You guys will be automatically placed as a private member of the private CFO Discord community, and you'll get full access to the Discord chat room. All right. So, hey, Sparky, thank you so much. Yes, everyone watching this, hit like. It really helps out with the YouTube algorithm and brings a lot more people into this channel, and it really helps YouTube recognize that you guys are enjoying what I'm doing here with the streams, and also you guys are enjoying all the videos that I upload on this channel. All right, so now based on everything that I've said so far, obviously we're not in a stock market bubble. Again, that's just my personal subjective opinion based on all the historical data that we've seen so far, and everything that I've mentioned for the past 2.5 years. If you guys have been a reader for the past 2.5 years, you guys should know why we've been in a good bull market, and you guys should know why I was able to correctly time the market bottom in 2023, and also call out for a bull market to begin from 2023 to 2026, even though now unfortunately, my perspective on the bull markets, the bull market trend going from 2023 to 2026 have been completely usurped by this change in trajectory by the markets, and obviously the overall economy now. This is becoming something of more of a bearish perspective now as we head into 2025 this year and all the way up into 2026, which again, I'll be giving a lot more full details, analysis, and data to my CFO Stream Watch readers. So just like Sparky said there, join and become a CFO member. You guys really won't regret it. I mean, I've always heard from people who have been readers for a long time, or even just people who had to take a small break. They always tell me that they're ready to come back because they always learn every single day of the month and every single week, since again it is a weekly report. So again, Commander Sparky, thank you so much right there for giving me a very quick review for everyone to read. I'll make sure to post this on my Instagram as well. But let me read what you said. You said, everything I am saying I learned from this man. I can proudly say part of the reason I've been able to navigate this market and not get slaughtered is from knowledge I've learned from Andrew. Thank you so much. Thank you very much. Okay, so that's something that I've always I don't really try to mention what my readers tell you guys, because again, I just like to just promote my report. I mean, this is just a report that a lot of people like to read. A lot of readers are reading it, and even if you don't want to be a part of the CFO Discord chat room, you guys can just opt out, and you guys can just become a reader. That will obviously give you guys the weekly report to arrive in your inbox every single Sunday night, along with a technical analysis video to accompany the full report. But yes, Joel, thank you. I second that. Thank you. I third that. That makes sense. Okay, so for me, I would say that I highly recommend you guys take the leap and just try it out for yourselves, right? And again, if you guys want to join, just simply take a look down below in the description box, and you guys will see the link to subscribe and become a reader of the CFO Stream Watch report, and you guys will also automatically become a private member of the CFO Discord channel. All right. Okay. Well, that's all I have to say for tonight, guys. And if anyone has any questions regarding the report or how it works, or if you guys want me to give you a little bit more details compared to the link that is provided in the description box provides. Okay, it's a website link, so go through the website. But if you guys have any further questions that you guys want to ask, maybe a question that is not being answered through the website alone, please DM me on Instagram at chartsfocus1. I'm ready to answer you guys 24/7 and give you guys, hopefully a detailed answer to your questions. All right. Okay, well, good luck tomorrow. Hopefully these streams, especially for this week, for Tuesdays and Thursdays, have been able to really help you guys. And like Sparky said there, hopefully you guys were protected from being slaughtered thanks to my streams. But most importantly, for any of my CFO Stream Watch readers, you guys should know that, you guys should have been hedged, or at least taking your hands off of the keys and not trying to be as active as possible, because we are still in risk-off market conditions. I've been repeating this for the past couple of weeks, all the way up into the start of last month, actually. Okay. All right. Well, have a great rest of your night, guys. I'll see you guys next week on Tuesday at the same time, 8:30 p.m. Pacific Standard Time, or 11:30 p.m. Eastern Standard Time. Thank you guys so much for watching, and have a great rest of your night.